This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Welcome to Breaking Banks Europe, the #1 global fintech radio network. This is episode 226. We'll be speaking about Fintech4Good, starting with affordable housing in Zimbabwe. My name is Elizabeth Kleinveld, and today I have Vusa Chimanikire, I'm sure I did not get that right, the CEO and co-founder of Entry with me, and Tawana Muchatuta, the managing partner of Africa Growth. So if y'all could please introduce yourselves, and if I butchered your name, please restate it so that everybody gets it.
Hi, Elizabeth. Thanks for having us. I'm Vusa, the CEO and co-founder of Entry. Vusa Chimanikire is my name. I'm a serial entrepreneur with a solid background in affordable housing and construction. Thanks for having us.
Thank you, Liz. Vusa, good to see you. My name is Tawana Muchatuta. I'm a managing partner at State of Africa Growth, LLC, based out of New York, but I'm physically in Zimbabwe. I'm a chartered financial analyst, or CFA charter holder, more specifically, and a chartered chemical engineer. I've been in this space for about 4 years on the investment side, and before that on the sell side.
Super. Thank you all so much. So before we get started, Vusa, could you please tell us a little bit about what Entry does?
My pleasure. So at Entry, we provide loans to individuals who don't have credit history. And we do this in sub-Saharan Africa. Right now, we're starting in Zimbabwe, which is my home country, and is very dear to our hearts. And these people need this service. So that is what we do in a nutshell.
So what is the problem that you're solving?
So, the problem we're solving is really a problem about information. Millions of people are excluded from the formal financial ecosystems in Africa due to a lack of information. And this is a lack of credit history, information on their income and collateral. And as a result of that, financial institutions just struggle to offer them financial services such as loans. And these people make up over 64% of the Zimbabwean economy, and over 60%, and over 60% of the African economy. So they're a huge chunk of people who are actually struggling to access credit. And so we're tackling the problem of lack of information in credit markets, which results in lack of average African workers getting loans to be able to build homes or just do big purchases. So at its core, our problem is really financial inclusion and creating financial ecosystems that allow for information to go between each stakeholder in each kind of ecosystem, whether it's in construction or just in general credit for SMEs, and get these individuals across the line. So we bring these parties to the table through our tech, and we execute.
Okay, could you tell me a little bit more about how you're actually bringing them together through the tech and how you're executing?
Great. So we drive wealth generation and the ability to build assets by helping individuals who want to build a home or add value to their existing homes, who are unable to access loans through traditional institutions and a lack of credit history. We actually help those people access those loans by giving them their very first credit score for a lot of people. And this credit scoring tool that we've created is proprietary, and we developed it. Uses a mix of psychometric analysis, which assesses the willingness for an individual to pay, amongst other things like financial literacy. And then we take a holistic approach of an individual's financial situation in order to truly understand their capacity to pay. And so for our customers that meet our criteria, we verify the information, and then we create a profile and a report in which we share with a number of our financial partners. And then we're able to deliver to them tailor-made loan products specifically for their needs at the time.
That's super. Could you give me a concrete example of one of these tailor-made solutions that, without you, they would not have been getting a loan?
Yeah, I love talking about our customers because one of the great things about being an entrepreneur is you're always learning, and especially us at our early stage. So we have a customer, and his name is Costa. He actually allowed me to talk about him on the podcast, and he owns a car rental business, a small one. He has a small fleet of vehicles, which he loans out to salesmen who do door-to-door sales in our city of Ferrari. And so he earns pretty decent income. He owns a home and he runs a home with 4 individuals that he supports, 4 family members. And so he came to Entry seeking for a loan to be able to build an extra room for his eldest son at his house. And he had just been struggling to get access to loans from traditional institutions because his business is somewhat informal, not really registered. And so when we came in, we gave him our application process, which is all tech-based. He went through it. He got his credit score, got his psychometric as well as financial health. And then we executed what we call like a financial lifestyle audit, where we then went to his place of business to verify that he actually does things at work and he has cars and things like that. And then we went to his actual home and his site to see if he was trying to build something and where he actually lived. And we assessed all of those things. Some mixture of kind of concrete and soft kind of things in an approach to be able to create this profile. Once we did that, we then shared this profile with a number of our microfinancial partners for his loan. And they were able to offer him different interest rates and different tenures. So from there, we discussed with him which one was he wanted to take. He selected one. And so we then facilitated for the microfinance institution to give him a loan contract. And successfully, he got it. And also to deal with his collateral. And then from there, through us, we managed to pay his preferred building material supplier, who then delivered in his instance, he wanted bricks as well as some roofing materials, managed to pay them, and they delivered to his location. And he's built his kid's room. Yeah.
So you probably know from me that I always like to know why are you the one who's really solving this problem?
So I think honestly, with my partner and I have had just, these life experiences from a personal perspective for me, being in the construction space for over 8 years. That was one of my first businesses. I've seen firsthand people failing to get access to mortgages and homes because they didn't have pay slips. They didn't have some of this traditional information. And so, my years in experience, understanding what they need and the stages in which they build that, and my passion for it, also just the tenacity and kind of the endurance you need to be an entrepreneur in Africa means I won't give up. And then my co-founder, he's got years of experience in strategy and consulting, as well as dealing in retail lending. And so that kind of our combination kind of gives us that unique edge to take this over the line. And we're really good at looking at individuals so we've got some employees now who we've brought in, and they follow our culture, kind of our ethos and vision, which is solving some of the biggest problems in the world, such as housing and credit. And they have banking backgrounds, and they're just really interested in seeing more and more people in that space and getting formally included in finance.
That's super.
So that's why.
Thank you. But before I move on to Tawana, just one last question. You were talking about in stages. I don't know if everybody gets what you mean by this.
Yes. So what I mean by in stages, so in our economy, because people struggle to access, right, big lump sums of cash, they've actually become accustomed to building their homes through like saving a little bit and then building their foundation and then building their walls, going up to their roofs, windows, and finishes. And so we're actually bridging that gap. So those are the stages I'm talking about. So normally without us, it'll take an individual maybe 3 years to build a house. But with us, we can cut that time right down to like maybe a year.
That's amazing. Thank you so much. So, Tawana, if you can explain a little bit about the economy, how the economy works in Zimbabwe, so that we can give more context to Vusa's solution, that'd be great.
Yeah, sure. Happy to do so. Zimbabwe is, as we know, a SADC region, Southern African development, in that area of Africa. It's about $30 billion USD in GDP. It's a net importer, and that's sitting at around 8 million on both sides. So just a little bit more of 8 billion coming into the country versus a little less going out. And the main sectors in Zimbabwe are agriculture and mining. And these sectors are very capital intensive. So it needs a lot of debt but debt is expensive, and you can hear that from Vusa's and what they're trying to do
Absolutely.
and solve. And that expensiveness with those higher interest rates, it's in Zimbabwe is typically higher than most emerging markets as well, and it trickles down to the average person, and that makes it a good market for microfinance. And if I look at microfinance just specifically within Zim, it sits around a loan book value of about 40 million USD and growing. That fluctuates because of currency differences. Yeah.
And what kind of interest rates? You were saying higher than what we normally would see even in Africa.
I think you can see at the worst case scenario, you're talking 5% per month.
Ooh.
All right. And it can get higher than that.
That's really
if
ouch.
Uncollateralized. Yeah, no, that's definitely going to hurt you. And at the corporate level, with a decent sized SME, I think the best are getting maybe 8%, and they should be getting a lower than that. And that you won't, I mean, a lot of that is not public knowledge, so it's hard to say exactly what that is, but that gives you a sense of the range, and it's relatively high.
So with what you just told us, how do we translate all this into the ability to obtain a mortgage?
I think, so that's an individual buying a house, and Vusa's covered a bit of this friction that exists, right? And we talk about capital, where it starts, and then how does it get down to an individual? There's not enough capital to start with. That's problem number one. And the capital that's there is, of course, expensive. And getting a mortgage really comes down to risk appetite. Now, if there's no cash and there's not enough deposits, and you've got policy rates that are prohibitive to encouraging providing mortgages, you're going to get less of them, and the ones that you get are just always going to be relatively pricey. So qualifying for one is quite difficult. When you have ratios of underserved and underbanked that are really high, it's even your penetration for mortgage rates or mortgages is even lower as a result. So there's a lot of headwinds to mortgages, and that needs to change.
So it sounds like there really was a gap in the market that, Vusa has tapped into. What do you think of this kind of solution?
So entry, I mean, it's connecting otherwise people who are unserviceable customers, right, from the existing sort of ecosystem outside of possibly microfinance. But the quantum of microfinance or what they're giving is just, it's not enough, right? And that continues to the micro building, the stages that Vusa was talking about earlier. So de-risking those unserviceable consumers so that they can not only get capital, but also the utility of that capital from goods that they need in order just to build that property or that asset at a comparably lower price. That's valuable.
It sounds that way. Yeah. So could you tell us a little bit more about your investment thesis? Because it really is different than what I've heard of others, and how you can help a company like Vusa's with investment or some of the other options you've got.
No, sure. So at Africa Growth LLC, so we're not MasterCard, but we really focus on, we typically get bundled into VC. We don't see ourselves like that. We maybe micro PE is what we'd like to be labeled as. And we're very hands-on, despite the target number of portfolio companies. Our sectors are energy and fintech primarily, and we do touch on water and agri-tech. In terms of our approach, we're looking for growth, pre-growth, with little product risk or as little as possible, and ideally servicing a B2B market, right, particularly on the tech side. We couple our equity deployment with debt as well. And that's really important for two reasons. One, the valuations, in order to get a lot of capital within a business, at lower valuations, it can't be dilutive. So we provide non-dilutive capital that is affordable. We've already spoken about the cost of debt that's currently exists in the market. To founders who would struggle with lack of track record and operating history within the market. And we'll provide that from 1 to 2 years so that they can be tactically disciplined around the use of that debt. And our ticket sizes are between 100 and 5.5 million.
Super. Anything that they have to have, like a certain amount of MRR or ARR for you to be interested, or you open even to pre-revenue?
So We're happy with a couple of interest in pre-revenue companies. I think really speaking to just the product risk, we have to have a conviction around that product being ready for market, properly tested. So anything that's still trying to do POC will probably still hang around and engage with that prospect, because relationships are not made overnight. We need to get to know the founders. So typically, even though our process may be quick, our getting to know them, where it actually starts from lead, can be up to a year, right? In the worst case scenario, right? So we really need to understand what they're doing, really be walk that walk with the founders or the team or the management team, depending on the structure of that company. And yeah, that I think in half answers the question. But yeah, there's scenarios where that would not have a revenue before we invest. Yeah.
Super. And are there others out there that are doing something similar to this?
I think in the space and how we look at what entries doing, for example, they will be typically good examples and not so good ones, because we talk about providing capital where it would otherwise be expensive or difficult to get to. And there's a couple of examples that do that, and either they're sector specific. So we've actually have one of our portfolio companies partners with. They provide loans for solar. And they give that through the business, and so they pre-qualify or qualify the individuals, and they're putting in solar systems within their home. There's a range depending on the size of the asset, the home itself, of how much they can get access to, but that allows them to pay incrementally or in pieces over 12 to 18 months. So that's an example of just channeling capital in a way, making it affordable because it's tied to a utility that essentially will become a potential collateral if it needed to be, but it de-risks the loan, if you like. So that's a really adjacent example of what a company like this is doing.
Super. And your model for your micro PE is different than a lot of those out there. I think it's great that you're able to offer not only some equity-based investment, but to give some debt to companies so that their valuations don't need to be crazy and they can grow with without people taking too much percentage, so that they still have enough skin in the game to make it interesting for later. Other things you want to say about your model or Fintech4Good that you've seen?
I think the additional benefit is also on our stakeholder side. It helps us with liquidity. VC is a long game, and having a debt component provides a DPI to get to one a lot faster. We've seen that in our calculations up to 30% faster than non-debt component in the fund structure. In terms of the other sort of companies in this space, fintech, doing Fintech4Good, if you like, I think there's actually, if you think of what Brightspan is a Bain & Company nonprofit spinout, and they do some analysis around impact with this concept from a footprint versus a handprint. And within one of their clients, Cellulant, which is a mobile payments provider, and they actually started by giving revenue to musicians. And in that investment, that when they were doing the analysis, they found that distribution of capital to smallholder farmers increased or decreased the original loss, which was 80% of that capital, down to 10%. Wow. Right? That's a drastic improvement just by using the technology. And that's a non-obvious example because that wasn't the purpose of that business, but it is the impact, if you like, the handprint of that. Then there's more direct examples. We've spoken about Xsolar and companies facilitating that sort of loans. And you've got even for, I think we spoke last week, you and I, Elizabeth,
yes,
which is giving loans for taxi drivers to buy assets in order to create value for themselves and have an income.
Absolutely. So when we were speaking last week, I was mentioning that Indai is enabling these drivers to, instead of having to drive somebody else's car and give them the lion's share of the money, they start building wealth by being able to lease to own the vehicle that they're driving. And actually, they've got this wait list of 2,500 who really would love to be able to do that. So they're raising so that they can be able to service these folks. We got another company, Roadrunner. They're in Nigeria doing something similar. So I think all of these companies that help people or businesses obtain loans that are fair, that help them to have better livelihoods, or others have better livelihoods because they're building wealth and not having to give money away, can stop cycles of poverty. So really excited about those kind of things. Can you tell us a little bit more in general about the fintech universe in Africa, the things that you see?
Yeah, I think when we look at that space and you hear a lot of the excitement around fintech, it's growing fast, lots of people on the continent, and you hear a lot of solutions. The similarity really sits around facilitating payments and remittance. So big remittance is a huge component of African cash flows, and when lending intersects as a subset of that, you can see the value add start to really creep out of that, and that's that good element. I think these sectors include like nano finance, so just the micro loans, which are either a day or a week. You've got education, asset acquisition, as we talked about, buying a car, for example, or the housing that Vusa is solving for, or augmenting working capital. So this is really for SMEs who just need that capital to service their customers and provide their products or pay for their products. And then from the lens from outside of these in terms of examples, Empower, that does the education, allowing people to have get a tertiary education either on or off continent. You've got MFS, which has an ecosystem of in the fintech space with impacts around loan provisioning, and Jumo as well, which is a legacy player to some degree.
Super. Thanks for those examples. I'm going to go back to Vusa for a moment. So, when I think about people applying for these loans, how do you ensure that they're actually using that money to build their home? So I think it's wonderful that you went and you checked out, and you saw where you wanted to build, et cetera. But how do you know that he's actually working on it?
Yeah, so like I said earlier, we bring all the stakeholders to the table. So that's the customer, the bank, and then the building material supplier. So the actual borrower never receives cash in hand. They just receive building materials, which will correspond with what we assessed, right? We went to see what stage of the house they're at. So their quotation would tally with that, right? They needed 10,000 bricks. They were at a certain level. So that's how we actually assess that. And make sure that an individual is actually going to use these materials to build.
Super. And how much would the average loan be for, let's say, the first time they come to you?
So average loans vary between a range of about 700 to 1,200, maybe 5,000 in some instances. As we've started off, we're partnering with banks. So they're getting they're getting into it, dipping their toes into kind of our product. And so a lot of the loans are kind of a bit restricted, but they're going to be more and more bigger ticket sizes as we grow. But currently 700 to about 1,200 United States dollars.
Super. And, can you say anything about how many borrowers are interested, or how many deals you've been able to do?
Yeah. So, we've been growing. We've managed to score close to 2,000 people, at least applications online. We've had over 14,000 clicks to our website when we run our ads. We have also had people completely finish our scoring process that are in the late 300s. And from that, we've converted to at least 10% of that, at least 30 loans are out to date. So that's currently where we stand. And we've been, since we renamed and rebranded and had a hard launch, we've been at it for about 5 months now, 6 months.
That's great. So let's go back to how you assess their credit worthiness, because I think this is really unique piece of the pie that I haven't seen other people doing it like this. This is like your USP, right?
Yeah, yeah, and so we developed this. You heard me mentioning a psychometric analysis, right? So just to reiterate, it's a psychometric analysis is when you are looking at the psyche of the borrower, and we developed that using local psychologists who helped us develop it. So we look at like local cultural norms and the psyche of the society. And so our questions actually are pulling out personality traits that reflect someone's willingness to pay, financial literacy, adaptability, agility, people who can deal with shocks per se in an African economy. So that's the psychometric piece, and it's very soft. And then our alternative financial piece, it revolves around going deeper into actually understanding a borrower's like ability to pay and what they actually do day to day. We're actually in the process of forming benchmarks in industries right now from the amount of data that we collect. When we do that office visit, looking at their receipt book, their invoices, their type of clients, all that information goes deep into our assessment process.
And is there anything else you can, use that for? So like once you have a kind of credit rating of somebody, can they use this for something else?
Yeah, absolutely. So our goal is, we're starting with housing, but it's majority financial inclusion. We've had other companies actually request to use our process for lending in the ag tech space, for example. And so the use cases are across the board. We're looking at launching other products in the future, some of them being rent to own and things like that. So the use cases for the product are huge, and we're hoping to actually have it become borderless and have a borderless credit system where my credit score in Zimbabwe counts for in Tanzania or anywhere like that.
So now that you brought that up, let me ask you what's next on your roadmap. Is next on your roadmap more things, offering more things in Zimbabwe, maybe like the solar panels that we were just talking about earlier, or expanding the entry solution to Nigeria or another country?
Yeah, so our next goal is to expand into other countries, as well as we also test out new products in Zimbabwe. So the current product we have, I think we're way past POC now, and we're trying to launch that in Rwanda. Actually, we're in very high-level conversations with some individuals there who are into housing development. So they're interested in our credit scoring capabilities. And so we should be trying that out soon. And then locally here, we want to launch out, like I mentioned, the potentially rent to own in other products. We might actually go vertically and assist SMEs in raising capital or loans, some of the gaps that Tawana mentioned on the call. Mm-hmm. We're really looking at having our credit score become the standardized credit scoring tool and credit reports that provides borrowers all this additional information, which we think is really critical to get them to the next level.
Very cool. And I remember being on a call with one of your microfinance providers, and they seem really excited about what you're doing and the ability to expand with you, be it to other countries or these other verticals. So very nice. Thank you so much. Now, back to Tawana, how much of the fintech space do you believe can actually grow? What are your thoughts on this?
So we focus on, sure, Liz, we focus on sub-Saharan Africa, right? And so we take a closer look there than anywhere else. Mm-hmm. And if we compare that to the largest fintechs in the world, I mean, a lot of their revenue is driven by strong economic basis. And the fundamentals there are land, labor, entrepreneurship, and capital. Africa has a lot of all of the above except for capital, right? And to justify that, we have one of the youngest populations in the world. I think majority of the countries in sub-Saharan Africa, 50% of the population is under 20 years old. In terms of land, we're the second biggest continent, land in square kilometers, and only just a little bit smaller than the whole of Asia, right? And so we're not a far second at all. And if we talk about entrepreneurship, they're young. So lots of people that are young, driven, hungry to work hard and contribute. I think there's three ways to grow a population as well. It's either through immigration, birth rates, which are high in Africa, or extending the life expectancy, right? And our ceiling is far away. So we can do that and have a huge impact. So a lot of tailwinds is basically what I'm trying to articulate. The capital is where the problem is. And so the more money that comes in, the more rails being built to make sure that capital is going to the right place and being used effectively, then it's just going to, everything else is already there. The ingredients are ready for that to grow quite extensively. It's going to take an ecosystem approach. And I think we can echo in terms of timelines some of the emerging markets around the world, which are really exciting, like China and India, which grew very fast over the last couple of decades around these sectors, where you've seen the Ant Financials and the Paytms, well, at least before recently, but come out of these countries respectively. So there's a lot of upside in terms of the fintech space, but still a lot of work to do.
I agree, but I have seen such great entrepreneurs coming out of the region, and we do at Startup Bootcamp have one of these investor roadshows so that more capital hopefully can be going to the region. There's going to be a QR code that can be scanned so that listeners can also decide if they want to attend and hear some of these companies pitch, like Indire Roadrunner, like we discussed, but we also got some ag tech and some companies that are trying to help small-scale miners to be able to mine in a safer way and stuff like that. And I know that Vusa also has a QR code if people want to be able to see more of what Entry's doing. Tawana, if you've got anything that you want to share that we haven't discussed, or things that you think the rest of the audience should know about, please share.
Well, sure. Thank you, Liz. I mean, you can find me on LinkedIn, Tawana Muchatuta, easy to find. And our website, africa-growth.com. And happy to chat. Always looking to talk to people in all different sectors and chat more. And we also have partners at how-to-Africa, and that's a free wiki page that just giving information at a high level about the continent, hoping to educate as much as possible about the potential this continent has.
That's really, really great. So, Vusa, did I miss anything on your side, or you think we covered it all?
I think we covered it all. I could talk, all day about just what we're doing and how money management is a cultural thing that's very attached to socioeconomic growth in any economy and country. And I really think we're changing the world. I mean, that's the last piece I'd like to say. We're rewarding good behavior through the work that we do at Entry, and would love for people to really check out what we do. That's
great. Love those rewarding good behavior and helping folks who need loans get those loans so the economy can be thriving. Yeah. Thank you all so much for joining. It's been a pleasure speaking to the both of you, and I hope to continue the conversation.
Thank you so much,
Liz.
Thank you.
Thank you.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.